Well, good Wednesday morning. I'm Scott Shelby. This is Market Day Report. Thanks for being with us today. I'm not going to bury the lead. I'm just going to jump right out there and say that I think that we're pretty much carrying on in the same vein of trade that we did yesterday. And let's look and see how right I am there. Let's take a look at that corn table. Corn table brought to us by Bar Chart all day. D's corn up at 6 1/4, trying to make a run at that gap at 5.72. 6 cents higher in the September at 5.77 3/4. How does the soybean market look as well this morning? Soybeans are going to be better. They were better overnight. Let's see how much better they're going to be. Up about 1 3/4 cents in the September at $14 even, $14.75. November going to try to make a run more at that $14 level today. We're at $13.91 and that's up 3 pennies. Chicago wheat. Chicago wheat also was a little bit better overnight. 6.5 cents in the December, tacked on at 7.15 1/4, and September gains 7 cents at 7.07 1/2. Moving on to Kansas City. Kansas City wheat up 8 1/4 in Sep and Dece. September stands last at 6.68 1/2. December at 6.79 1/2. That's only about a penny and a half, 2 cents off the highs. So we're still hanging in there. Spring wheat. This one was a difficult one yesterday, and it continues in that same vein today, just not as much. And I think that's going to be the lead right now, starting off things. 2 1/4 cents lower in the September at 9.13 3/4, and December down 1 1/4 at 9.03 1/4. And that's a good segue into bring in our market sage, Brian Hoops, president of Midwest Market Solutions. Brian, where do you see things today? Am I that wrong saying that it's kind of the same vein as yesterday? I haven't seen a ton of change in the weather. What are your thoughts?
Hey, good morning, Scott. Yeah, we're kind of still trading the weather, of course. That's a big thing. And the weather models that we're looking at are very concerning. There's only about 30% of the Corn Belt that even has much of a chance of rain over the next 15 days. And so, I think the market here has reasons to put a little premium into it. We're talking, going through the end of July now into early August without much rain. That would certainly affect fill for the soybeans, fill for the corn ears, and we're at a point where we need maximum yield potential. That's what the USDA has forecasted for us, 179.5 bushel an acre for corn, and we just can't go that long of a stretch without some moisture. So that's one of the main features here, certainly putting some support into corn and beans. We heard rumors yesterday that China was interested in buying U.S. wheat. It was soft red wheat yesterday. This morning, now they're sniffing around for hard red wheat. We've seen, the winter wheat complex kind of move higher in the last couple of days, while Minneapolis has been unwound on the short leg of spreads, taking profits on those spreads. That spread between Kansas City and Minneapolis hitting about $2.50 a bushel just the other day. So they're certainly correcting off of that spread. We've been hearing that the millers in the north are looking at blending more winter wheat with the protein levels of the spring wheat contract, and that's certainly due to the price level and the disparity between the two wheat exchanges.
Are you in the camp that says that if we don't get this big weather rally in the short term here, the world's going to have to come pay the piper and come to us when they realize that they've got problems in China or they've got problems in South America? We're going to be the place that they have to come this fall. Do you agree with that?
Oh, absolutely. The Brazilian corn crop continues to be downgraded, and the USDA has been very conservative once again with their lowering of yield potential there. They did come down to, I think, 93.5 million tons in the last report, but there's private estimates that are well below that, into 85, 86 million ton range. So, there's really not any other place for the nation or the world to go except back to the United States. And so that could dramatically affect our balance sheets. And again, USDA has been very conservative in making changes to those longer term balance sheets. But once they do, that certainly could mean our yield numbers come down and our demand numbers come up, and that will tighten those balance sheets much tighter, I think, than the 1.4 billion bushels that is currently forecast.
All right, great. Stay right there, Brian. We're going to go away, come back and talk about where you expect the livestock to open up. We'll talk about that with Brian Hoops after this break. Well, thank you for coming back. I'm Scott Shelby, otherwise known as the Cow Guy, and this is otherwise known as Market Day Report, still is. We were talking to Brian Hoops from Midwest Market Solutions. He's the president there. Brian, cattle and hogs aren't open yet. I'm going to go through where we went home last night, and I want to get your view of what you think is going to happen this morning. We were a little easier in live cattle across the board, with August down 47 cents at 119.77, and October off 40 cents at 124.70. We were easier again in feeder cattle, if my memory serves me correctly, and it's still there. We were off $1.85 in the August at 155.52, and $1.27 in September at 157.77. And then finally, good old lean hogs. They were the stalwart yesterday. They posted some gains, up 52 cents in the front at 105 even in August, and up $1.65 in October at 91.02. Brian, we talked about the grains kind of staying in the same vein as we were yesterday going home. What do you expect? Do you expect that with cattle and hogs here today, or is it going to be, I know it's kind of a quiet time and there's a little bit less of information out there, but what are your thoughts?
Yeah, the cattle market, we saw a little bit of trade on north areas yesterday, 125, maybe that was Monday night trade, 125. It's certainly going to be better than what we trade in the south this week, I think. And we just don't have enough head to determine where that market's going to be. But it certainly appears, if we could trade 121, 122 in the Southern Plains, the feedlots will definitely take that. Of course, we have a cattle on feed report coming out Friday as well. And those numbers, the estimates look fairly friendly. So I don't think you're going to see a lot of weakness in any of the contracts going into that report. Placement numbers could be in that 94% of last year level. And that's quite a change that we've seen over the last several months. So I do expect to see some buying interest develop in some of those deferred cattle contracts, especially like December and February, April contracts.
Where do you stand on the demand side of things? I mean, we've got, you saw what happened on Monday when we started to worry about demand. The market flapped around a little, pretty quickly. But I mean, I think I think demand is going to stay good. I don't think we're going to have a lockdown. I mean, who cares what I think really, but that's just my own personal opinion. But I think that it's going to be a strong demand situation continuing in the same vein. And I think that we're going to have these producers, ranchers, and farmers kind of step up to the plate and deliver. And I think that that's going to keep those ratios tight. And I think that's going to give us a lot to talk about over the next 2 years. What do you think?
Right. Yeah, I don't think we're going to see any type of lockdown situation again. We could go back to more mask mandates, but you're right. We saw maybe a tick on Monday where we were concerned about the longer term demand or a shutdown. I just don't see that being in the cards. We've done that once. It didn't really, benefit us in any degree as far as demand goes. It really hurt things more than it helped. Now that we have some vaccines, we know a little bit more about the COVID, and maybe wearing masks will benefit us. But I certainly think we're going to stay open. I think demand is going to stay strong, and I think we should move these cattle and hog markets a little bit higher here in the next several weeks into early part of fall.
Okay, that's great stuff. If you're a rancher, good to hear. That's Brian Hoops, the president of Midwest Market Solutions. Brian, thank you very much for joining us today. I know we're about to kick off, and it's going to get busy for you in 2 seconds here. And now I'm going to have to hand it back over to Janet.